could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, the SPX and gold, but nonetheless to go ahead and get it started here. What we currently see is a monthly chart for Bitcoin. The last time, the first and only time I went over the chart was very first day of this year, January 1st of 2023, and there's a lot more on this chart when I went over it at that time. I'll leave the link to that video in the description, or I might even pop up an image of what it looked like back then. But anyways, I cleaned it up a little bit because I went back to it, not really with an intention, the other day, and then I realized that this had happened. I forgot I made this chart because I have so many different chart layouts saved that I forget a lot of them. But anyways, we can see down here with these time measurement tools, we can see each of these yellow vertical lines are halvings. This last one, this fourth vertical line, this purple one is also a halving, but I have it purple because I think this upcoming halving is going to be bearish. But before I get to that, you can see each of these 33 bars from the outer lines that I put around each of these halvings to create a form of range. Each of these 33 bars leads right into when the bear market's ending and the bull market is beginning, as you can clearly see with each of these, well, each of these three black boxes, not the fourth one just yet, but even you can see from the bull market top to the beginning of these boxes, first one was 9 bars, 6 bars, the current one's 9 bars, are all roughly the same. And you can see down here at the bottom, the duration of the box is 12 bars, 10 bars, 13 bars. And you can clearly see that the first and the third one are almost precisely identical outside of the fact that the box was, and I could actually, I could move this over, this box over a little bit, make this 13 bars instead of 13, but then this 33 bars would go to 32. So at the end of the day, it's still going to be a little bit different. But so far, this first and the third one are essentially identical, which again, as I've mentioned in many videos recently, the bear market, in terms of the harmonics, the way that the price moved in the bear market from December 2013 down to around September 2015 was essentially the same as from around April 2021, 64,000 down to around December of 2022 when Bitcoin had hit 15 to 16,000. The only difference is that this high right here this created a descending structure, whereas currently this high right here would have been synonymous, like this one right here that I was pointing to, and this second one right here was an ascending structure. That was the only major difference between these bear markets and how precise they actually were in comparison to each other. Now at this point, Bitcoin has already, let's zoom in here, Bitcoin has reclaimed at least 50%, it's a little bit above 50% of this point. If I actually take the fib retracement here from the bear market or the bull market high to the bear market low, we can see that Bitcoin has already closed above the 0.5 line. The current candle is sitting with 15 days left above the 618. If it can close above this, which I think it's 50-50 at this point, whether or not it closes above it or if it closes just slightly below it, but closing above the 618 will be very important. And while I have this fib retracement up, which actually no, that one doesn't even matter, but so if I go backtrack in Bitcoin's history a little bit, I take the retracement from this bull market high to this bear market low. This is the bear market of phase 1 of cycle 2 for Bitcoin. Everything from here up to here would have been cycle 1. We can see that this high right here was within the 2.186 to 2.382, specifically almost reaching the 2.321. And we can see that this first high right here was lining up with the 1.5 to the 1.618. And we'll see the importance of that here in just a moment. But if I move to this bull market top 1200 down to around $163, this lines up with the phase 2 bear market. Again, same cycle 2. We can see the bull market was within this green range once again. Then I go to more recent price history, approximately 20,000 down to approximately 3.1 thousand. This bear market right here is structurally, according to my phase cycle theory, synonymous to this first retracement that I took from around $32 down to around $2. The reason why it clearly obviously looks different is because of the lengthening of the cycles, Bitcoin's decelerator of growth over time, bull markets being less bullish and bear markets being less bearish over time. But what we can see here is that this first high so far, the prior double top, 64 to 69,000, lined up right smack in the 1.5 to 1.618. Again, going back to how it happened right here during April 2013. And what we can see here, the most important thing is that this green range has not been met yet. We are in, everything we can see right here encompasses and defines what phase 1 for the current cycle 3 is for Bitcoin. And the specific retracement that lines up with the phase 1 final top of the prior cycle 2 that I was going over lines up with $223,806.10. Again, approximately 230,000, give or take like $20,000. That's if we get a descending double top upcoming, like I mentioned in the last video, because we will be leading into cycle 3's phase 2. So again, we'll see something like this in the upcoming bear market to bull market. I believe we, again, instead of seeing the ascending top we saw right here, which is just a part and inherent of the phase that we're in right now, because we'll be leading into phase 2 after the upcoming high. We'll see a descending double top as we lead into the bear market, which will, like I said, 230,000 for the all-time high, give or take 20,000. And then I think this descending second top somewhere probably towards the end of next year, assuming my route is what it ends up happening, will be around 180,000. But again, just to go back over why I think the upcoming halving is going to be bearish, again, it all depends upon the decelerative growth of Bitcoin and the fact that the halvings approximately occurring every approximately 210,000 blocks in the Bitcoin mining process, approximately every 4 years. The halving is a static thing. That's not necessarily going to change. It's always going to be approximately 210,000 blocks in the mining process for Bitcoin. But given this is something static, overlaid on top of the fluctuation of Bitcoin's price over time being a dynamic structure, we have a static structure on top of a dynamic structure. So I think it is inevitable at some point. It may not be this upcoming one, I may be wrong. Everything I could be going over in this video and what I'm going over in this chart could be totally wrong. I'm not saying that I am right, but I think it's inevitable at some point that we will see a bearish halving due to the static dynamic relationship that I went over. But to move into this chart here, this is a 2-month chart. First thing I want to point out is these vertical lines lined up with each of these yellow bubbles, and the RSI lines up with this upper black line we can see descending right here. This acts as, for this 2-monthly chart, has acted as the final criteria that Bitcoin for the RSI in this descending channel needed to meet. Each of these you can see was when Bitcoin finally had reached the prior all-time high and started to close above it each and every single time. We haven't seen it currently. We're very close to it at this point. Again, like I said, I think we're just going to continue to go up here on the higher time frames. I definitely don't think this 2-monthly chart will see a major red candle within the next maybe 4 to 6 months at this point. If you look here at the MACD, the monthly MACD has already seen a bullish cross, but this 2-month MACD is the next thing that we're going to want to see for Bitcoin. It's very close. It's already been ascending and showing the deadening of momentum towards the downside. It's been gaining minor momentum towards the upside. Whenever we finally see this bullish momentum flip, then it will start to see clearly what we need to see in bull markets we saw during the prior one. And finally, this ascending trendline structure that we see up here, if I zoom in just to the current cycle we're in for phase 1, everything we see here is characterized by the double bottom into a lightning bolt-like pattern, or what would be traditionally characterized as an A, B, and C. Well, actually, my bad. C and then D movement, or ABC, depending upon how you look at it or draw it. But that's what characterizes the current phase we're in for the cycle 3, phase 1 for cycle 3. And this lower bound for this trend range, whether or not you take it from this candle right here, which holds the wick high, or you take it from this one where the candle actually closed, it essentially creates the same range. But anyways, this is also validating the approximately $230,000 target that I gave on the prior chart, which adheres to the Fibonacci retracements and my phase cycle theory. Now it's possible that we wick a little bit higher. As you can see, this range is created by the wicks in the prior highs. So I mean, it could, at highest for this first peak right here, it extends all the way up to around 412,000. About halfway above it is around 300,000. Now, as I said, just looking here at the bull market of phase 1 for Bitcoin of the cycle 3 that we're in, I said that I think we're going to, rather than we saw an ascending structure right here, I believe we're going to see a descending structure. Well, let's see right here. Yeah, so that was actually, so a descending structure rather than an ascending structure during the prior bull market. Now, I could be wrong about this, and it could, again, do something like it did back here. If so, it could wick back up somewhere around, basically, probably very late, maybe like last 3 months of 2024, early, like maybe first half of February of 2025, which gives us a range of around 280 to 313,000. And if it were to extend all the way up to this upper line, it's around 550,000. But I don't think that that's too likely. I think that the fib retracements that I went over here on this chart is invalidative proof that it's not going to go significantly above approximately 250,000. Even if it did, I think it would just be a wick up to something as high as around 280,000 sometime next year, perhaps like first month of 2025. But so to move into the 6-hour chart here for Bitcoin, I've been updating this chart a lot recently with this ascending channel that Bitcoin's been in, finally seeing a significant break above it recently. We set a double top. There's a bearish divergence candle printed right here. It would be this purple candle right here. We saw the drop down to 40,000 like I had mentioned, somewhere right around when Bitcoin was in this area. Once it did get that double top and it saw this bearish divergence candle, I thought this was very likely. Then again, we saw a major wick. I said we continue to fill that wick out. So far that happened. Although I was expecting, as I went over my last video, to kind of more so see something maybe like this trickle down, maybe set some type of double bottom or something, and then kind of like come up. But so far it's been a little bit different. It's kind of being a little choppy. But at this point, really, nothing new to add here on the lower time frames in the next month. I still think it's totally possible that Bitcoin can, if it loses 40,000, somewhere in this vector zone right here, around 33 to approximately 30 to 33,000, also lining up with the 800, 400, and either 600 or 1,000 estimated moving average band right here. Plenty of reason to find support. And then if Bitcoin starts to lose 26 to 25,000, that could spell disaster. Although, again, I don't think that's too likely at this point. Now, I mean, we could totally see something like this. Let's say 30,000, 33,000 doesn't even get met. We could see something like this, and then it bounces back up, something along these lines. But when it comes to how it's specifically going to play out on these lower time frames, again, I have no idea. I mean, I don't even have any idea what it's going to do in the higher time frames, obviously. Clearly, I don't know I can't see the future nor predict it. If anybody predicts or makes a projection at a moment in time and it happens to line up with the future, then it's essentially like lucky, even though they obviously, like in this context, being a trader, you have a certain set of tools you can use, and you have your intuitions, and it can be pretty sure and have a lot of conviction that it's going to play out like this. So it's not just completely luck if you're a knowledgeable person on how the markets work and things like that. But I would say at least a small portion of being right about a projection and a prediction in the market is at least contains some small amount of luck of the draw. But if we look down here at this RSI, we can see that this purple range down here has been very significant in holding the price up, going all the way back to this final local low range we set back here before we broke out of the resistance and then retested it and then had the bounces I was saying was pretty likely back around halfway into October. What I do find interesting is if I go back to the 6 hour, we look here that the recent drop to approximately 40,000, the RSI went lower than it went lower than everything but this this point right here in the price. So the RSI was lower than the RSI was when Bitcoin was at the most recent local low at approximately 25,000, but yet Bitcoin was roughly double that. It was at 40,000. I see that as a pretty bullish sign. We totally could see something like this as well, where we see the price come down and make a slightly lower low, and the RSI continues to come down and it finds support in this purple range, and we see a bullish divergence here, and then Bitcoin finally then starts to reverse upwards and go back above the $44,700 value that represents the current local high right now. But to move in here to the SPX and gold, there's not really too much to update, but really the overall structure that I've been going over recently stays the same. Although the SPX is finally breaking above this resistance structure that it's been in recently, going all the way back to December of 2021. And if we go back to gold real quick, this gold saw the break above a very similar resistance before SPX. The SPX is kind of lagging a little bit. So I think at this point that it could overextend. It could retest the previous all-time highs. It could push anywhere from around maybe 5,100, 5,200, 5,300 at highest, where we'll see price overextend, breaking price-based resistance. And if we go down here to this very long-term bearish divergence the price has been seeing, or the RSI has been seeing with respect to price, then we'll see the RSI come up, get rejected at its resistance as the price is overextending right here. We'll see further bearish divergence in the SPX stock market in general, and then it'll continue to go down, as I've been saying throughout this year. And then, so if we take a look back at gold, basically the same thing. Price is already overextended. It could overextend a little bit more at this point. And we can see here that the RSI hasn't met its resistance. Again, very similar to the SPX scenario, but it definitely could. Let's say that gold sees one more quick move back up to around 2,200, 2,300 at highest, as I said. Again, we're seeing similarities even right in that sense. Like I said, 5,100 to 5,300 for the SPX, and then gold 2,100 around 2,300 I think is most likely if it overextends to the maximal. But outside of that, we can see here, zooming in, that there was a purple bearish divergence candle printed right here. It then led to a 12% drop. We saw one right here. If I go back to, there's a bullish divergence blue vector candle right here, just pointing all these out to show that on this weekly chart they've been very reliable. These bearish divergence and bullish divergence candles are a lot more reliable in the higher time frames than they are in the lower time frames, which is kind of just a general consensus of time frames in general. But we see one right here. Price dropped 14.8%. We saw one right here from this wick high to this wick low was 5%. That one was pretty inconsequential. And going back to right here, we see from this wick high down 15%. So it looks like 15% has been the norm so far. Obviously, this isn't the chart for gold that has all the data, but I use this one because it actually prints these the white and the yellow and the purple vector and the black vector candles. The trading view version of this chart doesn't show it, which is why I'm not using it. But so factoring that in, from this wick high down, pushing 15%, 14.5 to 15% is going to put the price at around $1850 down to $1,800, which would start to bring the price in jeopardy of closing below the most recent local low right here. Also would stem up. I mean, there's generally, it all kind of is synonymous with this this vector zone, this small one right here, where we can see this area right here, clear support within more recent times. So I think what's likely here is we will see whether or not price extends higher, who knows. But I think ultimately over the next year or two, we'll see gold come down, eventually lose this, come back down to this range right here. And then I think, now it could, two scenarios, it could hold this and continue to go sideways for a longer period of time. It could bounce here and then enter a new bull market, or it could, which is this one is what I lean more towards. I think we'll see gold continues to go down and enter a significant downtrend and enter a bear market, exiting this kangaroo sideways market that it's been in, going all the way back to August of 2020. But that was all that I wanted to go over and update in this video. So as always, hopefully you enjoyed, and hopefully you're able to learn something, take away some insights from this video, as none of this is meant to be financial advice, but to offer some sort of educational, informative content when it comes to technical analysis and the market. But all that being said, I hope you all have a blessed day.
Ooh, I'm regretting now.